それはレバヤさんニュースだ。デセットライズだ。逃げろ。誰でも音できる。誰でもスキルを稼げる。ガバナンスまである。中集権のメディアはもう終わりだ。
真相から立ち上るインクと真実がぶつかる。レバヤさんニュース開かれる海嘘はない。読んで書いて氷結しろ。力はみんなのもの。いい霞をたたえろ。ニュースは君のものだ。レバヤさんニュース。レバヤさんニュース。
Hello everyone, what's up? Leviathan News here, DAdvisoor with you, and I'm very pleased to be here today with this lovely gentleman that I'm pretty sure most of you probably already know. The Cap himself, Captain Rational. How are you, sir? What's up?
That's a pleasure. That introduction is absolutely awesome. I don't think it could have been done any better. That is
I
perfect.
agree, man. I'm really happy that you like it. Shout out to Arcus, ARQUS, the Llama who made it as a contribution to SQUID DAO. I was just telling the Cap about our system of some of you already probably know it, but if you're new here, I definitely want you to know about it as well. Every month, a new, like 1 million squid is emitted, our token, squid. And we basically want to distribute it as a reward for contributions. Whoever contributes to Leviathan News and SQUID DAO in any way, we want them to be rewarded, and we want to incentivize participation. That's basically the decentralized crypto media model that we have. So ever since a few months ago, when we inaugurated SQUID DAO officially, we have this snapshot vote where the community of SQUID holders vote on who gets which reward, and some goes to the news department, obviously our biggest department. It gets a lot of votes. The devs that's been doing a lot of work on the website and all that, Leviathan News .xyz, as you can see down on the screen as well, and the different shows, the classic Llama Party by Curve Cap, Johnny Online with his new vibe building show that's been really doing a great job building Flex, the new lending market. For the past few months, he's doing it all basically live streaming the way he builds it. And my show, Another Day on Leviathan, articles that we write. Shout out to Second Set Maze, by the way, for the great article that he did about resupply. I also have done this article that was nominated this month for rewards, and thank you voters, by the way, with Asyun from Gemak. And quite fun. And also, I actually convinced Arcus after I saw his amazing video for Regnum Morum for Rec. I actually told him, man, any chance that you can do this, do some video for us, and really as a contribution, and then next month you will be rewarded for it. Like, I will definitely vote for this kind of stuff, and I'm definitely, I'm quite sure that other members of the DAO will vote for it as well. And he gave it some look on our system because he wasn't really familiar with it, and he decided to do it. So much respect. Already, I think most of us are using it as the intro on our shows. It wasn't even really the main point, but now everyone wants to use it as an intro video. So shout out Arcus. Much love and much respect, and shout out all voters of the DAO. Cap, before we really start getting into it, and I actually share with you why I actually wanted you to come on today, and what I actually want to talk to you about, because I've been thinking about this idea actually for a long time, and I really want to start delivering on it, like to use the new year and start really exploring this new direction of thought that I've been having most of last year already as well. But before that, I just want to show you and the audience that a new auction, a new SQUID Pass auction has just surfaced. For those of you who don't know, let me just pop it on screen as well. It will be easier to explain what it is. So for those of you who aren't familiar with it, we have this auction system on Leviathan News, where we actually plan to do all kinds of different auction and offer services like written interviews or whatever, basically whatever any creator wants to do. This is our point of decentralized content creating. But some of these things are like decentralized, and they're like relying on a specific creator offering some kind of a service. But the more classic one and the most consistent one that we have every week is actually a general one of the DAO, of SQUID DAO and of Leviathan News, called the SQUID Pass. The SQUID Pass is actually a chance for any user, project, team, whatever basically, to go on Leviathan News .xyz/auctions, find the open auction that was actually just opened. It's going to be opened for almost, I think it's about 46 hours from now. And what you actually get if you win this auction is our Telegram and X pinned posts for the entirety of next week, and also a shout out on live streams. I will just in a minute I will give a shout out for zPass by Zeru, the winners of this current week. Thank you very much, guys, for choosing Leviathan News. We've actually changed the system a bit. Shout out to the devs, and now you can actually bid without bridging to Fractal and getting SQUID and all that. You could just use your wrapped ETH or CRV USD. Many of us' favorite stablecoin, I guess, and actually bid your way and get the pass. And whoever wins the bid, which usually wraps up during the classic Llama party by CurveCap on Friday, is going to enjoy the pinned posts on both our Telegram and our X for the entirety of next week. We've had quite a few winners last year. Cogsy often uses it. He's like the number one customer. He used to buy it a lot for AOZ, and now he's usually purchasing it for the Llamas. Regnumorob won it a few times. Robo Odin won it many times for quite a few projects himself, and like Neutral and others. And we really appreciate your participation, everyone. I will give a shout out to our winners of this current week, which are Zeru and zPass. Wait, I want to show you the website. Just a second. Okay, so zPass is actually a way to enjoy your on-chain reputation and see how you rank, and then be offered all kinds of like special deals and rewards and special yields. Because if you have like a very active Ethereum address, or EVM address, I should say, a lot of entities out there may be interested in offering you some stuff. So you can go to app.zpass.ai and mint your zPass, and check where you rank on the leaderboard, and then check if you have any kind of benefits waiting for you that you don't even know about. I think that, on-chain offers like quite a few opportunities that we're just starting, I think, many of us to realize, and definitely recommend you guys check it out. You can also get there by using our pinned posts on Telegram and X, and just get there with a click. So thank you very much, zPass, for Zeru. Actually, I should say, maybe I will try to show their profile online. Just a second. I want to also use the opportunity to show their X account and give you like a chance to follow them as well. So this is Zeru Finance, behavior intelligence for on-chain and agentic economies, programmable primitives, Z-score, ZApps, Z-API, reputation-gated access to capital, credit, and incentives, app.zpass.ai. Thank you very much for winning this week's SQUID Pass, with your to offer your zPass. It's an honor for us. And all right, thank you all very much. And Cap, okay. Thank you for your patience with this long intro, but I really wanted to give both like everyone the background of what's been going on, and to share some of it with you as well. Cap, actually, I wanted to have you on here because of this new concept that I kind of want us to explore having. You know, I think many of our audience and yours are like, a lot of the people like watch both channels, I'm pretty sure, and I'm definitely like a viewer, and I often write on X that honestly, I think if people follow one man in the space of finance, markets, DeFi, investing and all of that, if they really ask me who should they follow, I actually think the right answer is you. I think you have your very unique and elegant way of creating your monologue, or should I say dialogue, with the invisible audience that at some point starts participating with you, that really leads and share like the listener and the viewer through your thought process, through the way that you actually perceive the markets, the environments in which interact, and you actually give it all kinds of connotations and like angles in which someone can look at it, meaning perspectives, in the more general context of things. Like, okay, you can look at it at a very narrow scope, which is like just DeFi and what kind of DeFi opportunities one might have. But actually, the real questions that someone often needs to ask themselves before they start really acting financially in any kind of way is like, you know, mental questions about what are our actual goals with what we do, what keeps us happy, what keeps us sane, what's the purpose of what we're even trying to do, and really consider like the larger aspect of investing and capital management and in asset allocations, not even just in like financial or material terms. Like assets are also like maybe our time, our energy. How do we allocate that properly? How do we do the right moves and things? And I really think that for me personally, I will use this opportunity again to thank you, because you've affected me a lot in the way that I see things and the way I think about definitely investing and finance stuff and DeFi stuff, but also I think about life. Which often resonates. Back then, like when I was just like all over the place and just like, you know, chasing the number go up vibes, this also actually has like a lot of like mental effects, I guess. Like it brings in a lot of tense and tension. For example, until you move to this strategy of, if you pay me, okay, you're constantly discussing within yourself, okay, should I sell, should I not? Should I sell today? Should I sell in a minute? Should I sell in 10 minutes? Should I sell in half an hour? Should I sell now? And you constantly have that, but in a way, when you move from this like growth investing mindset to a value investing mindset, probably originates by the Omaha Oracle, Warren Buffett, and I guess
Right.
probably people before him maybe as well that I'm not familiar with, but like all of a sudden, like a lot of calmness kicks in, and it's like, okay, I don't know. I just want to check on Wednesday night or Thursday or wherever it's for you on the world. Like, did we get paid anything this week? Did we get a lot? Did we get a little? Like, and then just maybe ponder on why is that and what do we think happened. But at least for me personally, with much less stress, which is a very very big deal. And I actually want I want you, after my very long monologues here, to take the opportunity and like tell us a bit about yourself as an intro, first of all, how you started doing this. And actually, I would like to offer you that we start doing this whenever we can. Like, I know you're a very busy man, and I don't want to take too much of your time, but I do think that we have a very good opportunity, not only for me personally, but for our audience as well, to use your wisdom and your services to really like give us some of your perspective on markets, on finance, on life, and how people should handle themselves. And maybe we can also, with time, use your knowledge to also learn about all kinds of like financial terms that you know very well. And for me, still, I'm kind of struggling with many of them. Indicators, terms, and all that kind of stuff, maybe in a bit more simplified way to newer participants who aren't really familiar with your streams and have been following them for a very long time and already know them. What I'm actually thinking about is kind of like this show that you used to do with Ben.
It was a good show.
A while ago. It was a great show, actually. So I'm kind of talking about a similar version to that show, only instead of talking to Ben, which is a very smart individual and knowledgeable, that you can actually just talk about these subjects and you both understand each other, and then the audience hopefully understands you as well. Maybe talk to me and just try to explain me all that kind of stuff, which I actually think might serve in a way a wider audience that has no idea what it's all about, and maybe slowly they can start funneling themselves into this world and onto your channels and stream as well, as they hopefully slowly get to know like more and more financial terms and kind of all this kind of mindset of the stuff that you can offer. So Cap, take a few minutes, just let us know, like, who are you? How did you even get to this position and started doing that, and share this like kind of thought and started doing like these streams and whatever. And then maybe I'll start asking you about like, okay, what is even going on? What is markets? What is even up? Maybe I have this battery issue here with the camera. I will also, I'll just put you on the main screen as well anyway. Just a second.
Well, we're not going to go all the way back. That's
go wherever you want with it. By the way, let's see if you like this title that I've given you here. Let's see what you think about it. Captain Rational, DeFi and Market Savant.
I just wanted some sanity. So I, along with everyone, started insane. 2020, 2021 was insane. Now 2019 is an important perspective to have, because prior to 2020, at least my mindset was much more simple. I wanted investments, and I did not have a strategy. So 2019 played into 2020, and all of that, any semblance of strategy went out the door. It was an outright frenzy of activity, a frenzy of financial products. And I didn't even have that kind of terminology in mind. We were dealing with sushi swap launching and vampire attacking Uniswap V1, V2. And that was absolutely insane time. So the last thing I had in my mind was a strategy. It took some years. It took towards the end of 2021 for strategy to start to come into my mind as something that needed to evolve. So the best introduction I could offer isn't going too far back and to how I got to my current mindset, but is at least to clarify that I started just like everyone else as an insane person trying to figure out what to do, why to do it, how to do it. The first thing everyone comes to think about is how do I make money? And fast forward, we come to question what the heck is money, and you don't want to go down the wrong path. You want to have at least you want to start where I am now because that skips over so much noise. The first thing people think about what is money, and they go down the Bitcoin narrative and the hard money narrative, and that is not the right path. That's not the most sustainable perspective, in my opinion, to have on markets to really understand how to engage with markets. So this is kind of why, I start with you don't want to know all my history. You want to leapfrog and get past a lot of the noise that I myself went through to understand, or at least come to my current understanding of how these markets work. Um, the markets are both complicated and simple simultaneously. They're complicated because the fundamental mechanics of markets are contrarian and they're outside the scope of what people deal with on a daily basis. So that's an interesting topic I could touch on. It's kind of like what is money? Most people think they use money on a daily basis. They don't. People use currency, and these are some fundamental need to knows. So money comes in three flavors right about now globally, primarily precious metals. You can put it in two buckets: precious metals and United States government debt. Technically, all government debts are useful around the world to some degree as a money, but primarily US government debt. And then precious metals, which come primarily in two flavors: gold and silver. So that is the money of the world. Um, but treasuries are much more useful as money. Money prints currency. So currency is what everyone uses. And currency is what we all call dollars. So money prints currency. So now, obviously, these are much more recent talking points that I discuss, and this clearly is not talking points that I historically discussed years back. So this is part of that leapfrogging thing. Just get right to the best parts of the things that I've learned over the years. So once you first understand what is money, and then you understand how money prints currency, at least you're starting to understand how the global financial system functions at a mechanical level. And that's such a critical concept to fully digest because that plays no part in investing in stocks, investing in equity markets, investing in gold and silver. You don't need to understand anything about what is money. I mean, the general public is not really bond investors, and frankly, bond investing is kind of dead for countless reasons, which I won't get into. Um, when you're talking about the crypto space, that was probably one of my first realizations, especially towards the end of 2021, um, that these are the types of primitives that we're dealing with. Concepts such as money, concepts such as currency, clearly, interest rates, and lending. And this plays into really me breaking down the realization that there are five fintech businesses in crypto. Five and only five. There's nothing more and nothing less. Everything may be a derivative of one of the five businesses, but at some point, you're going to be talking about it in terms of the five businesses. Number one, credit. I'm sorry. Number one, foreign exchange. Number two, credit. Number 3, derivatives. Number 4, liquidity financing. And number 5 is liability printing. All right, so I just threw out 5 categories. What does that mean? Those are the only 5 businesses in all of crypto. So what are you doing in crypto? You want to think about what to own from an investment standpoint. So you got to first categorize what the hell you're owning and why you're owning it. Of those 5 businesses, what are the more interesting things to own and why? So foreign exchange, you have a business that offers the capacity to exchange one asset to another, and there's a transaction fee involved. So it's a very simple business. Credit, you take in some sort of collateral, some sort of money, or an asset that has money-like properties, or at least has value, and you're able to lend currency against it. I mean, in crypto, you could actually borrow money against money or assets against money. So it gets a little bit fuzzy around the edges. But fundamentally, if you borrow stablecoins against Bitcoin on Aave, you're taking a money-like instrument and you're borrowing basically a currency. So derivatives are, for instance, CRV-USD, YCRV, CVX-CRV, stuff like that, are assets that wrap a more fundamental asset. So, for instance, a yield bearing primitive that requires some sort of engagement, but the wrap derivative does not require that engagement. So often derivatives simplify engaging with a more complicated primitive asset. So obviously that's pretty complicated explanation. I don't like derivatives at all. And partially because it required that complicated description. And clearly, I understand the significance of a derivative. I even listed a couple of examples. But suffice it to say, no matter what, I don't like derivatives. Why? I like the fundamental components. I like to understand what a business is actually doing and what it offers. And I don't need something to simplify it. I want to own the base layer, the most fundamental component of a business, without having an intermediary. And that's really what a derivative is. It gets in between you and the most fundamental exposure to a business. Now, business 4 and 5, liquidity financing and liability printing. Um, liquidity financing only really exists in crypto. To some degree, it exists in venture capital, money market operations, and traditional finance. To some degree, are analogous. But in crypto, we have these emission schedules and these monetary policies where token supplies have disinflationary growth. And this offers the capacity for what I define as a liquidity financing operation. That's like the curve finance gauges or the convex finance gauges or voting. Um, Not that there's much convex to go around as incentives anymore, which is another conversation. But there's a lot of protocols that have tried their hand at liquidity financing, such as Balancer. It's probably the second most successful, separate and apart from their complexities over second half of 2025. Now, liability printing is the most interesting, ladies and gentlemen. Liability printing is the biggest business on the planet Earth, and that exists outside of crypto. It's just that most people don't understand that it exists. Liability printing is a capacity to turn money into currency. Now, to understand liability printing, you have to understand what the dollar is at a structural level. And once you realize what the dollar is, you understand why, in my opinion, one of the biggest opportunities in all of investing is in the crypto space, because liability printing is a fintech banking product. It's a fintech banking product. And if you go to the stock market and you buy Chase stock or HSBC stock or a stock of a bank, you own nothing. You own nothing of that business. You have no capacity to reap the profits of their liability printing business. So that is a bit of a disappointment to many. Owning stock, realizing that you actually own nothing. That's a very hard-hitting statement, and a lot of people would probably push back against that. But I equate value with actual cash flow. Now, if a stock doesn't pay me a dividend, it's worthless to me, because then I have to actually engage mentally with market participants to try and time the market or try and sell opportunistically after many people have purchased. And that's not how I want to engage with the market. I want to engage with the market as a passive investor. I want to own something, let that business that I own put in the work, and then that business pays me a pro rata share of the business's revenues. To me, that makes the most sense from an investment standpoint. A passive investor that has allocated capital, owns a part of a business, and gets a part of the revenue of the business. That allows for so many things. It allows for accounting optimizations, accounting simplification, investment simplification, and frankly, sanity. Because if you're dealing with capital gains, you're tracking basis, and you're trying to sell opportunistically, you're looking at technical analysis, you're going to drive yourselves mad. And frankly, the vast majority of people lose all their money. So this is part of my growth process over the last years. Heading into the end of 2021, I realized that's something I didn't want to do. So in 2022, I began structuring my capital and my investments along the lines of not growth. I wanted to own the most fundamental businesses of crypto, because it turns out the most fundamental businesses of crypto are not just of crypto. They're fintech banking products that are comparable to real world banks, to such a degree that I don't like that distinction anymore. Real world banks or crypto banks. You just got banks. If it walks and talks like a bank, it's a bank. I mean, if you go to Aave rank, can I share? I think I could share. It should work. Reminds me of my platform. Does it work? Can I put it on the screen? No. Yeah, it works. Okay, so if you go to Aave rank, Aave rank appears to be down. All right, so Aave ranks the total market cap of deposits for Aave against the major United States banks. Last I checked, it was the 46th largest bank in the United States. So if it walks like a bank and talks like a bank, it is a bank. So that's an interesting ownership. Now, Aave is not the purest form of value, in my opinion. It's not an undesirable thing to invest in. So I'm not here to talk about what to and what not to invest in. I'm mostly here to talk about what I look for and what I'm interested in. Oh, okay. Number 46. So it still is 46. Very nice. So I like these types of businesses. They're analogous to traditional financial fintech businesses, and they're just in crypto. But you can't own the types of revenues you get from Aave, albeit they don't have the perfect fee switch enabled, in my opinion. That's really reserved for projects like Curve Finance and not even Uniswap at this point. So,
by the way, Cap, first of all, I'm enjoying this so much. So I'm just letting you keep going, literally, because Jack, I actually think this is so useful. Can you maybe explain for those who aren't familiar with the website, what do these numbers actually mean, and what exactly are these ranks that we're looking at the theaverank.com website?
well, these are banks. Synovus is a bank. Valley, people know Valley National Bank. You go up to the top, you're going to see the big boys. There you go.
And what's that number? Like, this is like assets. This is the number in billions, right? Meaning that, for example, JP Morgan Chase at number one has 13
3.8 trillion.
billion. Yeah, 3.9 trillion, exactly.
That's right.
That's kind
Bank
of a
of
lot.
America.
That's kind of
A lot of money. So,
Yeah.
but Aave, relative to deposits, is the 46th largest bank in the United States. So what's pertinent about this page is it talks about it in terms of a bank, because it is a bank. You're able to deposit and you're able to borrow. That's exactly the business of a bank. They don't have the perfect revenue share model, but they have a hell of a business.
I would actually want to ask you something about this that maybe you can enlighten me because of this whole like thing called fractional reserve. Like for example, with Aave, when they say that there's 56 billion in there, I will go there in just a second. Again, when they say that they have 56.6 billion, this is like what is this exactly? Like this is TVL. This is money used as collateral there that people have put, or is it like something else? Because, like for example, the same metric also means that, like with JP Morgan and Chase, 3.8 trillion are actually like actual money that people have put there, or are there like differences that because of the TradFi system in comparison to DeFi, maybe there like that money is more like made up than in crypto, if you understand what I'm asking?
Well, it's all fractional reserve, even Aave. Aave is a fractional reserve bank. So these are deposits. So when you're talking about accounting, you got assets and liabilities. So the liabilities are also on the books. Liabilities is what gets lent out. So the point is, if you take in $1 billion worth of Bitcoin and you lend out $500 million worth of Bitcoin, you got $1 billion worth of Bitcoin deposits, and you have $500 million worth of liabilities outstanding, or some form of that type of conversation. So the assets that are deposited to these banks do get lent out. That is the fundamental equation for banking and
So the
fractional
number we're
reserve.
seeing there is actually the delta between these, or what exactly?
That's probably just deposits. What has been deposited. So what we're seeing is not what is or has been lent out. So
Okay,
a part of that value has probably been lent out.
okay, so actually, like for example, right now, like if I'm trying to explain it to myself or any other kid that doesn't really know about how this stuff works, this doesn't actually mean that there's 56 billion inside Aave, like sitting there waiting and liquid. This is like some of it is already out as as lent money.
I would hope the majority of it is. That's where the interest rates come from. That's where the revenues to the business come from. The
Exactly.
whole,
Exactly.
you want fractional reserve. The whole equation is a person should have an option for fractional reserve versus a holding type of bank. And there's no real holding types of banks out there. But from an investment standpoint, a holding bank doesn't necessarily make any money. You want lending, and that's where cash flow comes in. So really the difference between these banks isn't fractional reserve. The difference between these banks is how they manage the solvency, the balancing of their assets and liabilities. And that's with interest rates. And that's where Aave is different. Aave has a deterministic component, and the dynamic interest rates that Aave is capable of, in my opinion, puts it far superior to any of these banks on this list. Aave has a capacity to respond to demand and liquidity requirements automatically, and the other banks don't have that capacity in the same way. And that's what makes Aave different. But that's what makes all of crypto different. The investment opportunity in crypto, I'll put up a chart that I want to talk about at some point, is
Go ahead.
really these smart contracts. And the smart contracts introduce the most important consideration in investing in crypto, and that's called immutability and determinism. Now, the biggest problem with investments in the stock market is they're businesses run by people. Now, this is controversial and a lot of people don't like it when I say it, but the biggest problem with human resources is the humans. So if you want a business, a real business, a business that has risk minimized, efficiency optimized, people don't have a place in that business. People are uncertainty, and people create friction. People create dependencies and obligations and all the problems. And we are obviously people, but I think businesses can evolve to be automated. And that's the beauty of smart contracts and these types of fintech businesses. So if a business is predictable and you know what's going to play out under XYZ circumstance, that changes the entire equation about the entire investment equation. You have eliminated countless risks introduced, unfortunately, by the human component of traditional business. And that's something that I find and found back in 21 be downright fascinating. And that's what led me primarily to restructure how I look at and invest in crypto starting in 2022. Immutability and determinism. That's what changes the equation of the 5 businesses in crypto.
Cap, first of all, repeat these businesses for those who still are trying to like memorize them, if you can, like in just like mentioning them, and then if you can maybe talk us through like what is this graph that you have on screen there? What are you trying to show us?
Yeah, this
On
brings us
our first official lesson here with the Teach Me Cap concept.
most important graph we'll talk about, given how much time we have. All right, 5 businesses. 1, foreign exchange. Foreign exchange is basically an exchange. There's a lot of exchanges. Doesn't mean all exchanges are a good business. Frankly, it means most exchanges are shitty businesses because there's a lot of other components that go into a good foreign exchange business, particularly immutability, determinism, and rule number 3. We haven't talked about the 4 rules.
Whenever you feel like it, open that card as well.
The 4 rules are investment rules. Well, let's not digress from the 5 businesses. We'll reiterate them first. 5 businesses. 1, foreign exchange, plenty of exchanges. 2, credit, things like collateral and lending protocols, Aave first and foremost. Derivatives, Yearn Finance, the ultimate derivatives platform. Liquidity financing, Curve Finance, that's a liquidity financing platform. Of all the businesses in the crypto space, Curve happens to be all 5. It's one of few businesses in crypto that's all 5 of the businesses. And then the 5th business is the biggest business on the planet. It's called liability printing. It's the capacity to take in collateral and issue basically a liability against that collateral. And that's consistent with
what we know as stablecoins, if I understand correctly.
Stablecoins are indeed a dollar liability. That's the best way to say it. And we, without getting too complicated, in crypto, if you borrow stablecoins against Bitcoin not on Aave, that's a credit protocol, but if you deposit collateral into not even Llama Lend, if you mint CRV USD against collateral, that's liability printing. So Frax is a liability printer, Abracadabra is a liability printer.
Why is it different, by the way, from is it different than minting Go, for example, on Aave? Or
well, no, Go is a liability. The difference between the stable coins is how they manage their dollar value. So that's inspecting the business. That goes into the investment equation. So which stablecoin business is the most meaningful from a structural and implementation standpoint? So that's your investment thesis, understanding what has been built and why it is the best investment. And they all do things very differently. Now,
That's actually a whole other discussion that I hope we get to in one of the next few times when we should, because actually just by talking to you and having you guide us through it, I already see that, like, each of these topics and like subjects that you put out there, it's basically like a concept of its own for a show of its own, or a few shows of its own, just to get familiar with it even basically, not even to go as deep as someone following your stream for years and years, because it keeps teaching and teaching. It's not really that simple. So this graph that you have now on screen, how does it, like, what is it, first of all, and is it connected to the 5 businesses that you've just shared about, or what?
It's not, but this is one of the most important things to understand right now. So obviously all the topics that I've discussed, it's very easy to digress and have an entire conversation about the topics. You can have an entire topic about the 5 businesses. You can have an entire conversation about investment and just how the 5 businesses relate to the 4 rules. We haven't discussed the 4 rules, but one of the most important things with regard to capital management is to know where you are. And that is akin to having a compass on a desert island. You got to know where the hell you are. Otherwise, bad things may happen. You might buy the right thing at the wrong time. You might buy the wrong thing at the wrong time. You might start trading at the worst time possible in literal history. So that's what this chart basically tells us. The general public doesn't see it, what's going on right now. Because they denominate everything in dollars. And if you look at NASDAQ or the S&P, it's up 0.5% on the day.
What's the name of the chart that you're showing now for anyone who wants to go look at it at TradingView or Google or wherever?
You're looking at NASDAQ priced in silver.
NASDAQ priced in silver. All right.
Yes. So in gold, it looks bad, but in silver, it looks catastrophic.
Wow, man. Look at that.
So if you notice, this is a collapse of NASDAQ back to 2015 levels. So folks need to understand they're living through an absolute collapse of financial markets that makes 2008 look like nothing. Now, there's a different collapse in 2008. That was a credit crisis. So like literally you had your CDOs and all these derivatives were blowing up and they didn't know where bottom was. So basically the CDOs back in 08 was the collateral in the system. That was just one type of collateral. You watch The Big Short if you got a better understanding of what the hell went back in 08. But the point is the collateral was blowing up, and then that gets recursive, and that just causes more things to blow up, and you don't know where the bottom is. So right now, what's happening is, what is money is being tested. So the price of silver and gold is structurally revaluing. And when you price the United States stock market in silver, it's over the last 3 months especially is collapsing like it's never done in history. Now, you could get better data. So if you do like SPX, so SPX goes back.
What is SPX, by the way, Cap?
S&P 500. So if you do SPX, but you need the price of silver that goes back far enough. I don't know which one, maybe CMC? No. So I'm not going to sit here and pick too many. I could try 1 or 2. Silver. All right, not bad. Okay, so if you look at SPX priced in silver, this is a bigger collapse than 1930. This is a bigger collapse than 1971.
Wow. Can you zoom in a bit, maybe? Oh, wow. Look at that.
So if you look back in .com.
By the way, can you explain what are these lines over there, like the strong green one, the light green one, and the red one?
Oh, sure. These are just standard moving averages, very popular moving averages. So every variation, people like 20-week, 21, 22-week moving averages. And they'll all overlap on different time frames. And I look at the 10, the 50, the 100, and the 200. So like the 20-week moving average will look something like the 50 on the monthly. So they all overlap in some way, shape, or form. Moving averages help give us a point of reference to understand the average price over a period of time. Points of reference are critical to gain a sense of the compass, where we are relative to something. So as you can see, we over the last 3 months have absolutely obliterated an extremely long-term moving average, the monthly 200. It's very long-term. And over the last 3 months, we have a sharp decline that's only comparable maybe to 2002, but this is much bigger decline than 2002. And if you go back even further, the last 3 months makes 1972 look like nothing, 1993 look like nothing, and you go back to 1930. This is a massive monumental decline, unlike anything in history. The repricing of silver is fundamentally redefining what is useful money on the planet from a commodities perspective: gold, silver, and US government debt. Now, US government debt introduces a whole topic of conversation unto itself. But the point is, most important takeaway is right now, folks are living through one of the biggest collapses in equity, relative equity pricing that we've ever seen, just not priced in dollars. So that basically means the world is changing right now, today. They just don't see it. But if you understand that the world is changing, the first thing you want to think is, how is the world changing? Not really why. The why is not too important. It's how. So how makes
Really,
you want to.
I was actually just about to ask you why, but if you say that let's focus on the how, let's do that. Like, okay, so
Yeah.
how is the world changing?
So why real briefly is because everything's broken. Everything's perverted.
Okay.
Politicians are dumb as shit. They've made the worst decisions possible. The fiat currencies are garbage. They've borrowed too much money, and everyone has broken the system. That's why it's changing. It's pretty simple.
Basically,
That's like,
because of humans, you say.
yeah, humans broke the system. And that's what humans are good at. So maybe we could create some businesses where we get humans out of the equation and actually have businesses that aren't susceptible to the perversions of humans. Okay, so that's a good idea. That leads us to the crypto space. So how is the world changing? What is money? Clearly, Bitcoin is doing horribly. It's not performing at all meaningfully as a money. So it's gold, silver, and US government debt. And frankly, we see long-term interest rates in US government debt coming a little bit down today, 4.3%. So US government debt depreciated. The real story is Japanese debt, and that's been depreciating because the interest rates have been spiking. So the value of money around the world is very precariously depreciating over the last couple of days. So Japanese debt experienced, what was it, a 5 sigma? I think that is the number of sigmas people have been discussing, which is a monumental collapse in value. And if government debt is primarily used as money around the world, that's the collateral. So, and if money is used to print currency, um, we have an issue. So, folks think everything is normal right about now, or at least they're like, "Ooh, what do I invest in? What's going to work?" That's not the mindset to have right now. The mindset to have right now is um, the whole financial system is experiencing one of the largest revaluations in history. No, I take it back. The largest revaluation in history, an absolute collapse of the relative value of U.S. equities. So that's the compass. It's most important to first understand where you are before you understand the choices and decisions you can make with regard to where you want to go.
That's just that's mind blowing in a way. Yet literally, often this term is used on stuff that I don't know if they deserve that term, but I think what you've just described really is mind blowing. And I'll try to ask you this, although it's probably a very dumb way to ask it, but I don't have any better way of doing it myself. How is this related? Like, why is something going on in Japan and the Japanese debt? Why is it like the cause of something like this? And feel free to digress and just correct me on what I should be asking if it's not even like the proper question to ask. You know what I mean?
It's part of the equation, and it has to do with carry trades. It has to do with interest rates. It has to do with how cheap it was to borrow money in Japan for decades. So if you could borrow at 0%, 0.1% in Japan and lend to the United States government for 0.25% or 0.5%, everyone's going to borrow in Japan and lend it to the US. So if interest rates in Japan are going up, which they have, and they just spiked historically, you get conversations about the reversal of that carry trade, which is to the tune of trillions of dollars. And that this introduces systemic instability. So aside from the value of precious metals, aside from silver doing what it's doing, as we see against the SPX priced in silver, you have the interest rates of these long-term U.S. or government debt instruments being extremely volatile, and that introduces risks. Risks to what? Risks to the currency supply, because as the volatility of the interest rates goes up, people, bankers, either create less currency, or borrowers that have created currency choose to either not create currency or to destroy currency. Paying back debt destroys currency. So when someone sees volatility in interest rates, they may be inclined to pay off debt because they see risk. And that risk decreases currency supply as the debt is paid off. So the world can't handle too much currency supply contraction. And frankly, we've seen, if you look at M2s across the board, global M2, it's been steady increase.
Can you explain on what M2 is?
M2 is a measure of currency supply at a respective nation state level. You can look up a specific definition, but what deposits and credit and so on and so forth. Like M2, there's 22 trillion US dollars in M2. But the global M2 denominated in US dollars is several $100 trillion. So that's probably one of the best takeaways. So M2 is basically a measure of quantity of dollars that are in the system in some way, shape, or form. That's a decent statement. So one of the best takeaways is the M2 of foreign countries is significantly larger than $22 trillion. One of the most not understood concepts is how the dollar is created. Most people see US government debt as the primary creator of the dollar. Oh, Congress is spending too much. Oh, Treasury is printing too much. The vast majority of dollars weren't printed by the United States. They were printed outside of the United States, either using US government debt as collateral or varying forms of collateral. That's up to the respective bank and their underwriting process. But the world changed probably in the late 1950s, where we collectively accepted that we didn't need a paper dollar bill in order to pay for something. We could just pay for something using a bank deposit. So how does a bank deposit get created? If I go to a bank and say I want a mortgage on a house, or rather a HELOC, home equity line of credit. I want a line of credit, and I'm going to use my house as collateral. They're going to take the title of my house and they're going to give me a bank deposit for $50,000. Is that bank deposit $50,000 in a box somewhere? No, it's just a bank deposit. So the bank created it out of nothingness, and that's called a liability. The bank owes you that $50,000, and it has your title of your house as collateral.
So
So this is
basically,
how,
apologize for interrupting. Like basically, the bank just created that money
yes,
when he gave that. So
yes,
that's
that is
how
correct.
money is actually. I think one of the biggest misconception for new people. I know for me it was really like something. Actually, used to watch Mike Maloney's show on it, and I think that's where I encountered that concept for the first time. That okay, money isn't really created necessarily by an official printing process by this government or federal bank or whatever. It's just like, oh wait, that bank just created money out of thin air. That's kind of strange initially, at least.
That's called the Eurodollar banking system, and there's several $100 trillion that have been created. Let's say over $300 trillion, and the United States has $38 trillion in debt. There's $22 trillion worth of M2. I'd say the United States created about 12% of the amount of dollars that exist on the planet. 12%. So this is a great post, actually. That's
Yeah,
a,
yeah, that's exactly like, if I understand correctly, this is exactly what you're talking about.
yeah, well, partially. So people talk about this global reserve currency, but I don't give a crap about global reserve currency. This is Brent Johnson's wheelhouse. So what I care about is no matter what anyone says, if India owes Canada or Pakistan owes Brazil or South Africa owes Argentina or pick a country, Latvia owes Chile, they owe them dollars because they borrowed dollars. Now, maybe you've seen headlines, and they happen every now and then, where a country will issue dollar debt. Like Canada did this, and it was made some headlines. And the way they issue dollar debt is they create bonds, and the bonds are backed by like Canadian real estate or something. And when a financial party wants to buy these Canadian bonds, they pay in dollars. So the Canadians are able to raise dollars, and then some third party is buying Canadian bonds. But guess what? Those Canadian bonds pay an interest rate, paid in dollars. So Canada needs to come up with dollars to pay interest on their bonds because they raised dollars. So this is the most important reality to understand. The entire debt composition of the world requires dollars and interest payments to be paid in dollars. And as long as that's the case, nothing changes because next year, as interest rates keep going up, more dollars are required than in 2025, 2026, 2027, 2028. Every year, more and more dollars are required because, as with higher interest rates, more dollars are required to make payments on dollar debts. So, how do you get more dollars? The same thing I just mentioned. You post collateral, US government debt, real estate, equities, and you borrow dollars from a bank that issues liabilities using their double entry accounting books, using their Eurodollar banking systems. And that's how dollars are created. So there will be more dollars. And if there aren't more dollars, the system will collapse and there will be crisis and there will be defaults. And if there's defaults, that means businesses aren't paying paychecks. And that means there's crisis, social unrest. People are losing jobs. And guess what? We take the world as it is right now. That's not really what we're seeing. We're not seeing a monumental spike in unemployment. We're seeing marginal increases, but we're not seeing crisis levels. So I find that interesting. I think the world is relatively stable. And that's pretty much my takeaway from where things are. I think the monetary authorities and the fiscal authorities have a tremendous capacity to control volatility right now, especially post 2020. So we had the repo crisis in September of 2019. Was
What is
supposed to be
repo? What is repo cap, by the way? What does it mean?
interbank lending. So the repo rate is how much Wells Fargo charges Chase to borrow overnight. Um, so most people don't understand, and they think 2020, March of 2020 was the crisis, but they don't understand that the United States banking system failed in September of 2019. It collapsed. The banks weren't lending to one another.
Really?
So what happened
The
was,
banks. What happened in September 19 again? Like the banks stopped lending one another.
yeah, the interest rates spiked because they weren't lending. So the interest rates went through the roof.
Why weren't they lending one another anymore? What happened?
Trust. They didn't trust each other. That's probably more to the story, but the interest rate spiked. So if the interest rate spiked, the lending seized up. And if one bank can't lend from another bank, you're not balancing the books. If you're not balancing the books, there goes your transfers of capital. So there, you can't transfer from one bank to another if the banks don't have available capital to execute those balance sheet adjustments. So September of 2019, the United States banking system failed. It wasn't March of 2020. So that's a
So
little complicated.
so March was actually just the result of September, you say, in a way.
Who knows? You can entertain a variety of conspiracy theories. No need to. The pertinent takeaway is to understand the mechanics of the system, to understand that the banking system failed in September of 2019, to understand that there was an absolute global liquidity crisis in March of 2020, to understand that the United States banking system failed again in March of 2023. It would have been contagion and catastrophe of Silicon Valley Bank if the BTFP wasn't instantiated and the banks weren't bailed out. It would have been contagion. There's no way, shape, or form that that wouldn't have been contagious. So as
How is
timelines are
it,
telling. Mhm.
so how is it that things like, as you say, like why is it relatively still stable according to what
Ah,
you think?
that's the biggest takeaway. It's stable. Everything's relatively stable. Why? Because post 2020, post September 2019, you got the standing repo facility, you got the standing reverse repo facility also, and that's post 2020. Now you also have what Gensler kept talking about before he left office. He's like, oh, the DTCC. Oh, let's talk about the treasury market. It's the biggest thing. It is the biggest thing. The DTCC and the central clearing of United States government treasuries. So that was one of the biggest things that they changed. They require United States government treasuries to all clear through the DTCC. All transactions globally need to clear through the DTCC, Depository Trust and Clearing Corporation. That gives volatility control. So basically, the Fed has the repo facility, the reverse repo facility, and fiscally, they have the DTCC to suppress volatility. So that's probably why we're seeing gold and silver do something historic. If the powers that be have a capacity to suppress volatility across the short short-term interest rate markets, certainly interbank lending, and I don't know. I don't know how to explain the reverse repo facility right about now, but point being, if they have the capacity to suppress volatility in the treasury market to a degree with the DTCC, the spillover, the system finds a way to express volatility. And that volatility is being expressed in terms of money, in terms of gold and silver. And that leads us basically to where we are today when you denominate things like NASDAQ in silver. And things are absolutely collapsing to historic levels. They don't have control over this market. Or they did, or they do, using the banks and the short positions. But man, this is, I can imagine there's a lot of people talking right now. Very big, powerful people with banks and governments. Because how does this not blow up the short positions? The tremendous volatility.
And this graph, by the way, Cap, it basically describes the like investors looking for ways, like safe havens, ways to basically run away from what you're describing here. That's happening. That the system is collapsing, and they're just finding alternatives. And basically, them going to silver as one alternative is the graph that shows it maybe the best right now. First of all, how long has this been going? Like this very steep red line there.
3 months.
It describes like a 3 months period.
Just 3 months. That's all it is. Since November 2025, you broke that 100 SMA right up here, and maybe October. So
Do you have any what do you think caused? What do you think triggered it? If you have any assumptions
yeah,
on what started it?
I've learned in the software industry, I don't really care too much about the cause. I care about solutions, or I care about how to fix things. Or in this instance, I care about understanding what's going on, therefore I can make better decisions based on what's going on. People got scared. Someone got scared, and that caused other people to get scared. And that's the human condition. And then fear spreads virally. So, okay, something starts going down, it causes other people to start selling, it causes other people to start selling, and that's basically what's going on. So you got a bull market in silver and gold like you've never seen, and you don't have the appreciation of the equities market, so you got this spread that's basically historic. People aren't buying stocks, they're buying gold and silver, and that's creating absolute chaotic distortions in the relative pricing of assets. The biggest takeaway is things are changing, and this is not, well, this is necessarily the time to start to understand how these systems work, to consider what you own. And that probably leads us into a conversation about the 4 rules, about how to sustainably engage
Right.
with capital management.
Great, because just like you say, like one solution that many people have found, especially according to this graph, is to like run away to precious metals, and like it's been expressed mostly with with gold as well, but maybe even more expressed recently with the price of silver.
Yeah.
I've also heard some other estimations about why specifically it's silver, because I don't know, someone told me that they've discovered this new way to use silver in batteries and stuff like that, like other like small triggers that made silver look more shiny, literally more shiny. But like, take us through like some of the other maybe solutions, like you say, of like what can people do in order to find like specific safe havens. What do you do maybe, and maybe also connected to the 4 rules. It will be actually a great wrap up for our first discussion of this kind here, which I'm really enjoying, Cap. Really appreciate you coming here and sharing this knowledge with us. It's very useful for me, and I believe it's definitely useful for people in our audience. So thank you so much for being on here with us to share all about it.
That's a pleasure. To wrap up about gold and silver, gold tells a different story, very different story than silver. So .com priced in gold since 2000. There was a gold story, but right about now is a silver story. And I'm probably not the best to talk about it. You probably want like a gold bug or a precious metals bug that could probably tell a better story, the distinction between gold and silver from a global monetary perspective. So I find that interesting. I'll leave that as an open question that I'm not qualified to optimally distinguish between the significance of gold and silver at the global scale. But I find that interesting that gold and silver tell a different story. Not too different, but different. Anywho, so all of this leads to volatility, and volatility leads to insanity because you don't know what to do, when to do it, why to do it. So my sentiment is come up with rules of how to engage with markets that are irrespective of what's going on in the market. And that gives us a mode of operation, methods and procedures that are higher in scale and scope than any particular event. Very generic rules. And they're going to annoy a lot of people. So without further ado, rule number 1, own more assets. Clearly, it's not going to be currency that's going to get anyone to a good place financially. You're not going to save and accumulate dollars and get anywhere. You're going to get nowhere. Everyone thinks in terms of investing. So the most important fundamental rule is own more assets. And you could have an entire conversation about each of these rules. Clearly, that's a very open-ended, short, vague rule. What assets? What prices? What markets? So on and so forth. So we'll leave it at that for now. And maybe we'll circle back around depending how much time we have. But rule number 1 is own more assets. Rule number 2 is to know when to not buy assets. So that's a rule based on pricing. That came about, you don't want to buy things at the wrong price. You don't want to overpay for something. You want to pay a good price. So that comes down to compass. Know where you are in the markets. You don't want to buy Bitcoin at 125,000 when you could buy it right now at 87. Or you bought Bitcoin at 71 and it crashed to 16. So you got to know where you are in markets so you don't overpay for something. Rule number 3 is my most appreciated rule. It's the rule that everyone loves. Fuck you, pay me. That's the most important qualification of an asset. Otherwise, if you don't appreciate rule number 3, you're a technical analyst and you're attempting to time markets. You're attempting to sell something after many other people buy it. If many other people buy an asset, it goes up in price. So your goal is to sell it after other people buy it. And to me, that's absolute insanity. I mean, I understand the technical analysis and the strategy. I just do not wish nor choose to engage with markets like that. I want to, rule number 1, own more assets. And rule number 3, those assets better pay me. And rule number 2, I better make sure I get those assets for a good price and not overpay for them. So this is like Warren Buffett. He gets fire sale discounts. I mean, he's not engaged with Berkshire Hathaway anymore, but he would buy things at distressed prices. He would buy things when the financial system is encountering issues, hostile takeovers, so on and so forth. You get good businesses at good discounted prices. And that means you're executing rule number 1, you're respecting rule number 2, and you are rigorously adhering to rule number 3, making sure those assets are paying you. Otherwise, what's the point of owning something, in my opinion? Rule number 4 is about surviving. Rule number 4 is don't mess up the cash position. Don't fuck up the cash position. Because if you mess up the cash position, then you have to sell an asset or you have to make different decisions, forced decisions, suboptimal decisions. Rule number 4 plays into proper accounting, not from an investing standpoint. Rule number 4 means you can't spend all your money. Rule number 4 is you get a paycheck at the end of the week. You don't, if you get $2,000 a week, you don't have a car payment that's $2,000. You can't spend all your money. You got to have decent, you've got to manage the books in a reasonable way. You can't put too much money on credit. You can't take on too much debt. You got to be financially reasonable. Now, to pick one of your favorite commentators that discusses people's debt burdens. What is it? Justin Hammer or what is it? I forget. David Ramsey. What people do to themselves is downright. It's not just disappointing. It's scary, and I don't understand it. Rule number 4: don't mess up the cash position. Don't spend all your money. Balance the books. Never put yourself in a difficult position. Think ahead and be proactive. So rule number 4 plays into all the other rules. If you don't have cash, you can't buy assets. And if you pay the wrong price for an asset, rule number 2, you're not going to have enough cash to buy assets. So you don't want to overpay. So all these rules play into each other recursively.
Yeah. And if they don't, And if your assets don't pay you, you don't have any cash to not mess up.
The whole point of the assets is to pay you, so that you have cash.
That's
So
actually indeed like I remember like maybe it was in like the Robert Kiyosaki book or quote that I've seen like you know, assets and liability. Like, okay, first of all, ask yourself: does this thing give like? Am I getting paid or am I having costs because of something?
That's right. So we work for a salary, and you get a paycheck. It turns out back in 2021, 2022, I called it the pizza shop analogy. But what's pertinent is it's really like a small business analogy. Instead of working for a salary, you could also buy a salary. You buy a business that pays you. You buy an asset that pays you. The difference is when you look at equities, it's a stupid investment compared to these crypto assets, in my opinion, because you're dealing with a dividend that's chosen by a board of people that say, oh, okay, here's 3%. We'll give these peasants 3% to shut up and go away. Oh, let's give them 3.25%, 3.5%. Meanwhile, they get their fat paychecks as CEOs and they deal with human resources, OPEX, CAPEX, bonuses, real estate, and all their expenses. And
Corruption.
then, oh, all the bullshit. And then the investors get their their placation. They get their measly dividend. But the difference is in crypto, or at least the best of the best crypto protocols, you get a pro rata share of the business revenue. You get a part of the business revenue. So if the business makes more money, you get more money. You didn't have to ask the board to give you a greater dividend. You get more money when the business makes more money. You own a part of the business. So the difference in crypto is something that has never really existed before outside of private corporate ownership, when you actually own a part of the company. Because in equities, you don't own shit. In crypto is the closest that the general public gets to private corporate ownership.
Also, with such a low entry bar, because you can literally invest with like $10 or $100. Like I'm not saying that it's going to necessarily give you a very big revenue each week, but everything is relative. You know what I mean? Like maybe someone out there in the world only has $100, and $1 is a lot where they are. So if they get I don't know, $20 a year from their assets position, maybe it changes their lives. As weird as it sounds to people in our sides of the world, you know.
It's all relative. That is an excellent point. And it also leads into a completely separate conversation about age and capital availability and how to manage capital at a different age depending how much capital you have. I mean, all of that is really, the four rules are over encompassing, but different decisions get made depending on your age and how much capital you have available. Whole different conversation. Nothing much more to take away of the charts for today. As I wind down the amount of time that I have, you zoom in on the weekly on Bitcoin, we're hovering around the 100 SMA. I don't see anything interesting. I'm much more interested in probably the next 4 weeks, 2 to 4 weeks. I want to see how things play out with regard to this interaction with the 100 SMA. But if you zoom in here, you can see that on a weekly basis, and today is Wednesday. Let's see, did we close below uh, week 4 of December 2025? Because thus far we have higher low, higher low, higher low across the board. And we're currently at a higher low. So this is interesting to say the least. You got to wait for candle body closes, got to wait for maybe 2 to 4 weeks, maybe the end of February. But things look pretty interesting from a technical perspective, in my opinion. I want to see what happens compared to April of 2022, which was Q1 2022. I want to see if we hold the 100 SMA as support, and if we push back towards the 50 SMA. The 50 SMA is a dark green line, 100 SMA is the bright green line. So as you can see the analogy here, you have 3 interactions with the 50 SMA, 1, 2, 3, 1, 2, 3. You have the breach of the 50 SMA to the downside towards the 100 SMA, which is the same exact thing we see here. Is it different this time or is it the same? Do we fall through the 100 SMA, which is right about here and right about here? Or do we push back towards the 50 SMA and breach it back towards the upside, unlike what we did in Q1 of 22, where we got rejected at the 50 SMA, this orange circle. So the question is the orange circle the same or different? Frankly, that brings up an entirely separate conversation of where we are at from a monetary policy and global money volatility standpoint.
Actually,
All
great
these,
to keep us like with a whole lot of topics for next episodes, hopefully. Cap, I've enjoyed it so much. Actually, I actually think it's a great concept of a show that the audience kind of needs, and I think that it can serve our audience, especially newcomers, very well. And hopefully, some of them will be wise enough to use your services and follow you and your regular streams. You're doing it twice a week these days, if I remember correctly.
best of times is twice a week, at least once a week. That's my minimum.
Usually Fridays, basically regularly, and sometimes Monday as well.
Most of the time, 2 days a week. Definitely Fridays at 11:30.
Amazing. Also, I know that you have your own Discord server. If people really want to like dive deep with you and get into like the most rational community, as you often call it.
The most rational community in the entire crypto space of the folks that are interested, and it's there. We've been there, and there is a very diehard cohort and group of people that have been there for years at this point. We're always interested in helping people make better decisions, and we're there because it's the place to be for the most rational conversation.
Incredible. And sir, again, already looking forward for the next time and having you on, and maybe we'll talk later about like some of the topics, like where should we even start, because there's so many like these different concepts, whether within like the 5 businesses in crypto, whether it's the 4 rules, whether it's all this like actual markets and finance stuff that I want to ask you about, the different indicators, the different terms, the different like TradFi businesses. It's really all over the place, but I actually think that we can go on a multi-year process here of teaching the public about finance, and actually think it's very worthwhile and very, very useful. So thank you for your time so much. Really enjoyed it. Enjoy your treadmilling as well. And I hope you have a great day ahead. Let me just remind our audience, thank you so much for being here. Go follow the Cap at Noah Seidman on X and on YouTube as well. Captain Rational, you can also find him. I'm DAdvisoor. This is Leviathan News. Let me pop up the camera again. Sony is a great company for cameras if you're looking for them, but remember to charge your batteries on time, unlike I usually often do. And I will just remind you, okay, I will actually give us another shout out to Zeru and app.zpass.ai. Let me try and pull it up here to show it to you guys. And winners of the SQUID Pass for the current week. Thank you so much, guys, for this sponsorship. Go mint your zPass, folks. Earn some crypto. Enjoy the benefits of your on-chain reputation. See how you rank, and check if you have any like special offers available because of your on-chain reputation. And remember that we do have an ongoing auction that just went live a few hours ago. Shout out CurveCap for uploading it. It's at leviathannews.xyz auctions. The best deal in crypto advertising, by the way. By the way, Cap, if you ever want to advertise your Discord or something like that, feel free to bid for the slot yourself as well. It's open for about 44 hours from now. It's going to remain open. I'm going to share about it on my X as well. And folks, thank you so much for being with us. Please like the video, subscribe on our Telegram, on our X, join us, come and do some decentralized media with us, earn some squid, enjoy the snapshot votes, and will send us away with showing everyone the great video by Arcos again. So thanks everyone. Bye. Thanks, Cap.
Pleasure.
それはレバヤさんニュースだ。デセットライズだ。逃げろ。誰でもトトできる。誰でもスキーを稼げる。ガバナンスまである。中堅のメディアはもう終わりだ。
真相から